The Financial Giga Chads were right. The RBA held the cash rate. Let's have a look. Hello everyone, Florian here and welcome to another episode of Heiser Says. Grab your stein of coffee and let's have a look at the latest information or statement from the Reserve Bank of Australia regarding the cash rate. And once again, I do not have to bother updating my chart because it is staying at 4.1%. They have held. Now, before we go through the statement, the last one by Philip Lowe, let's jump over to this screen and have a look at what you, the viewers, said. So I put a vote out there to the Financial Giga Chads of the channel yesterday, 21 hours ago. Will the RBA raise rates tomorrow? And for the first time ever in the glorious history of these series of polls, you got it right. The majority said no, the RBA will not raise rates. 40% said yes, of 1,300 votes, and 60% said no. So that 1,300 votes, that's equal to a Finder survey where they'll generate, equal in number to a Finder survey, not the same methodology. But they'll, do some scare article and put it all out there and get the views. But so there you go. Let's have a look at your comments while I have a shot of coffee. So, Littered Everywhere is saying food and basic necessity price rises are no longer factored into global inflation. I don't think you get what you're saying there, mate. But inflation is due to the Ukraine stuff. M2 money supply has been declining. Therefore, inflation is declining. They will hold. Okay. Leet is saying, check out the oil prices. RBA is a follower, not the leader. Okay, what is the oil price? Let's go trading economics. And right now, crude is at 85. Brent is at 88. Let's have a look at what Brent is sitting at. The charts here. Let me adjust that slightly so we can see it. There we go. So yeah, at $88. Let's go on a 25 year. So it's not at the highest it's ever been. It's slowly climbing up. What about the Aussie to the USD? How's that going? How's it responding? 63 cents. And people are going, the Aussie will crash, the Aussie will crash. Well, if you think it will, I mean, it's going to, if the worse purchasing power our dollar has, the harder it'll be for us to purchase imported goods and services, which is a significant portion of our economy. Even building our houses, so much of it is imported. But it also means education, foreigners buying houses, and natural resources and produce. All the exports of Australia will be more attractive to people overseas. So if you think the dollar is going to crash, well, are you diversifying your income streams to start getting money paid in another income? Yeah, why not? We have a look here. I remember when it was over $1. Boy, that was fun, wasn't it? We look here at 50-year high. The Aussie dollar in many ways is a proxy for the Chinese economy. That's what a lot of people use it for. So we'll jump here and we'll go back. So referendum vote coming up. No rate rise till this is over. Yeah, we'll see. We'll see. I don't think a rate rise is coming anyway. No, they won't. Inflation will rebound. Cowards, nah. Leave it. Inflation will be fine, left to its own devices. If they don't, they're just prolonging the hurt for people living beyond their means. Sell your house before the banks take it. Know when to quit before you go bankrupt. Oh, you don't want to always give up at the first sign of trouble or adversity. Sometimes you got to toughen it out. Just make some sacrifices. Sell your air conditioning unit to all those people who can't imagine renting a place without an AC. There's $500 right there. There you go. There's a chunk of a mortgage payment. New Zealand Bank has been raising their mortgage rates despite the over-the-counter rate stable. They should, but they probably won't. You would think Lowe might raise one more time on the way out, just as a final FU to Albo, but I doubt it. I don't think he's... I know people like to pretend that's what it is, but I can't imagine Philip Lowe being that type of person. He is hoping so. Yep, someone thought yes. As the new governor of the RBA, Michelle Bullock said, interest rate decisions will depend on climate change. Yes, she does seem to, well, climate change will impact it. I mean, indirectly, it will. All of the government subsidies, intervention into renewable energy is going to drive up our taxes and drive up our energy costs. So that's going to increase inflation, and then that will flow through to the cash rate. That's what they mean, isn't it? You know, I'm sure of it. Yeah, it's the future ain't going to be cheaper. It's not going to be cheaper. So I think there'll be one more rate rise followed by a long pause. I think we're at the pause, to be honest. Wish they did raise rates before house prices take off again. Charlie reckons house prices will take off again. Yeah, well, I've got a 9-point argument, the 9 pillars of the housing market here in Australia. It's not fair. It's kind of bullshit. You know, hey, well, housing is coming off the insane COVID prices. I can't see us going up that much, that quick again. At least I hope not. They won't put rates up. They should, but they won't. A few years later, people who hold houses will be smiling and praising themselves for what financial Giga Chads they are. Yeah, that's it, isn't it? It's like all the geniuses, you know, the boomers who bought like for nothing, bugger all, and then a decade, 2 decades later, they're financial Giga Chads. A lot of it's luck, guys. Or understanding that housing is pretty much a protected species in this country. And then wonder why the kids can't afford to leave home, to buy a home on their own because of asset inflation. Yeah, well, you're just going to have to live at home forever and work at Macca's. RBA will hold rates. My guess is no, as inflation numbers have dropped. New Labor appointed RBA head. If so, no rate rise. They tend to surprise the market sometimes. They do, but they, well, where is it? If we have a look here on Trading Economics, we can see this is in line with predictions. The market was not surprised with this. There you look at that flat line there, boom. They should, considering today's Melbourne Institute inflation numbers and the US rate rise, but they won't. They have to make sure this Ponzi should continue. They're too gutless to do what's required, but they won't because too chicken. They should, but they won't. Or the stock market will be punished. Yeah, so a lot of people want them to raise rates, but now at the point where they understand it's not going to happen. So let's jump over here and have a look at this statement, the last one by good old Philip Lowe. So guys, you know, we've read through many of these. I think we need to raise a stein to him as he retires. I'm sure he'll be okay. So, at its meeting today, the board decided to leave the cash rate target unchanged at 4.1% and the interest rate paid on exchange settlement balances unchanged at 4%. Interest rates have been increased by 4 percentage points since May last year. The higher interest rates are working to establish a more sustainable balance between supply and demand in the economy and will continue to do so. We don't even have, well, I would argue housing, we don't even have a sustainable balance between supply and demand. Demand is just going through the roof. It's not decreasing. They're not doing anything to mitigate that. And supply has taken a huge hit because of the construction apocalypse. We've lost a lot of skills in the industry and just the challenges of the last few years. In light of this and the uncertainty surrounding the economic outlook, the board again decided to hold interest rates steady this month. This will provide further time to assess the impact of the increase in interest rates to date and the economic outlook. Inflation in Australia has passed its peak. Okay, so we're past peak inflation. We're past the worst. It doesn't mean prices aren't going to stop going up. They're just not going to go up as much as we have in the past. And the monthly CPI indicator for July showed a further decline. But inflation is still too high and will remain so for some time yet. While goods price inflation has eased, the price of many services are rising briskly. Rent inflation is also elevated. The central forecast is for CPI inflation to continue to decline and to be back within the 2 to 3% target range in late 2025. The Australian economy is experiencing a period of below-trend growth and this is expected to continue for a while. High inflation is weighing on people's real incomes, and household consumption growth is weak, as is dwelling investment. Notwithstanding this, conditions in the labour market remain tight, although they have eased a little. Given that the economy and employment are forecast to grow below trend, the unemployment rate is expected to rise gradually to around 4.5% late next year. Wages growth has picked up over the past year, but is still consistent with the inflation target, provided that productivity growth picks up. Returning inflation to target within a reasonable time frame remains the board's priority. High inflation makes life difficult for everyone and damages the functioning of the economy. It erodes the value of savings, it hurts household budgets, makes it harder for businesses to plan and invest, and worsens income inequality. And if high inflation were to become entrenched in people's expectations, it would be very costly to reduce later, involving even higher interest rates and a larger rise in unemployment. To date, medium-term inflation expectations have been consistent with the inflation target, and it is important that this remains the case. The recent data are consistent with inflation returning to the 2 to 3% target range over the forecast horizon, and with output and employment continuing to grow. Inflation is coming down, the labour market remains strong, and the economy is operating at a high level of capacity utilisation, although growth has slowed. There are significant uncertainties around the outlook. Service price inflation has been surprisingly persistent overseas, and the same could occur in Australia. There are also uncertainties regarding the lags in the effect of monetary policy and how firms' pricing decisions and wages respond to the slower growth in the economy at a time when the labour market remains tight. The outlook for household consumption also remains uncertain, with many households experiencing a painful squeeze on their finances, while some are benefiting from rising house prices, substantial saving buffers, and higher interest rates. Yeah, this is the two-class economy, the two-speed economy that we have here in Australia. It's just going to exacerbate. It's not going to get any easier, guys. And globally, there is increased uncertainty around the outlook for the Chinese economy due to ongoing stress in the property market. Some further tightening of monetary policy may be required, so they may raise rates again, but they're leaving that in there. Remember, we read about that yesterday, to ensure that inflation returns to the target in a reasonable time frame. But that will continue to depend upon the data and the evolving assessment of risk. In making its decision, the board will continue to pay close attention to developments in the global economy, trends in household spending, and the outlook for inflation on the labour market. The board remains resolute in the determination to return inflation to target and will do what is necessary to achieve that. So there we have it, everyone. Let's have a bit of a think about this. Well, for once, the Financial Giga Chads, my viewers were correct. They didn't raise rates, although there seem to be a lot of people that want them to raise rates. I can't see, well, honestly, I think we're going to be in the pause for a while. We're going to be sitting on 4.1 for some time. The next move, the longer we stay at 4.1, the more dramatic the next move will be. It'll really be breaking news. If it's down or up, that'll be the difference. And there's predictions of it going down. Now, if people are sitting there, holding on, waiting for rates to hit 0.1% again, I would honestly be really shocked if we ever see that in our lifetimes again. I think we might be hovering around 3.5%. Might go back to normal. We might actually earn some money on our savings for once. They just need to get, inflation just needs to work its way. I think it'll take some time. What do you reckon, guys? Hey, one thing's for certain, I can't see housing getting any cheaper. Not just from a construction perspective. Anyway, let me know your thoughts and opinions on this one. Thanks for watching. Check out HiserBim or Heiser Does. And if you want to support us, you can on YouTube, Patreon, referral links, merch, or call us if you need an architect. Take care, and I'll see you next time. Bye for now.